Shopify, Shopify, Shopify. Yes, indeed. Oh, I love some Shopify stock. This is a growth stock. It's done tremendous over the past 5 years, but obviously it had the crazy explosive growth during Rona, and then it had to come down from that, right? Which was quite a vicious thing, but that is all in the past now at this point in time. Now, when you look at Shopify, its stock price might be completely crazy, right? But the business model is actually incredibly stable growth over time. And you can pull up a chart like this and it just shows you how great Shopify's growth has been year after year after year after year. If you look at Shopify's stock price, you would think Shopify is like up and down all around. But then when you look at the actual business fundamentals, right, you got to differentiate between a stock price and what's happening with the stock price and what's actually happening with the business fundamentals, because we know stock price can be driven by a million different things, right? What's the Fed doing? What's the Fed likely to do in the future, right? What are you willing to pay for stocks? What about a certain growth rate one quarter versus another? What are somebody willing to pay? Somebody might be willing to pay, 1,000 forward P for Shopify at a particular time. Some other time they might be willing to pay a 30, right? It's completely different, but the business fundamentals are what matter. This company last year did well over $7 billion of revenue, billion dollars of revenue, with about 26% growth overall. So phenomenal growth company Shopify is, right? On top of that, 2-year stack, looking at 1000xstocks.com, 2-year stack, expected revenue growth is expected to be over 50%, right? Now, if we go ahead and look at the forward P in the stock, forward P is trading about 59 on the stock. 2-year forward P, which is a new metric we just added to 1000x, which I think can be very helpful to folks out there. That's trading at about a 37 right now for this company, which is significantly, obviously, above where the market is. But let's be honest, the market doesn't have this sort of growth rates, right? There's a whole different growth category for this company. And to show you this, check this out. Get ready to get your flapjacks flipped. Look at this, okay? Current year expected EPS growth, 112%. Incredible, right? What about next year's earnings per share growth? They should have about 40, this is analyst expectations on average, expecting about 46% earnings per share growth for next year. And then on a 2-year stack, earnings per share growth expected to be around 200+% for Shopify overall. So this is one of those companies that whatever they do on their top line growth, so let's say they grow revenue 22%, they should grow the bottom line at a much more substantial clip for this company overall. So they're going to eat up that forward PE. They're going to eat that up over this next couple of years. Now, additionally, Shopify has an A+ balance sheet, one of the most incredible balance sheets you'll find out there. $1.6 billion plus in cash and cash equivalents. They also have marketable securities at $3.5 billion. On this company, you look at total liabilities. Total liabilities? Come on, man. I mean, it's like nothing compared to what their cash and the marketable securities are alone. I'm not even talking about all the other assets in the company. I'm just talking about literally the cash and the marketable securities way outweigh the liabilities. If you look at total stockholder equity, it's right around $9 billion for this company overall. Absolutely phenomenal balance sheet at Shopify. So it's not just a growth engine, top line, bottom line, it's also a great balance sheet company, right? This is their latest quarter. They had gross merchandising volume was up 23% year over year. This might be the most important number of all the numbers, okay? This is their revenue, but if you exclude the logistics business they sold last year. So they sold off this logistics business, right? So it makes all their revenue numbers look lower if you don't take that into account, right? But if you exclude the logistics business, 29% growth is really their reality in the last quarter, right? And I mean, how many companies are really putting up these sorts of growth rates in this economy? I mean, we're seeing companies like UPS, FedEx, Starbucks, so many other companies with their revenues literally going negative right now. Their revenues are going down, right? And their Shopify is, you wouldn't even know it's a tougher business environment out there because they grow. Imagine if it was a great business environment out there. Imagine what their revenue growth would be in that environment. Incredible, right? Monthly recurring revenue, MRR, which is a very important metric for Shopify, that's up 32% year over year. They're at $150 million plus now at this point in time of monthly recurring revenue. Absolutely incredible for this company. Also has about over a 3% attach rate for this company as well. Now, gross profit grew 33% year over year. So they did almost $1 billion in gross profit. Incredible number, right? If you look at total company gross margin, over 51%, that's up from 47.5 in the same quarter last year. If you look at subscription solutions, 81.4% a gross margin there versus 78% in the same quarter last year. And if you look at merchant solutions gross margin, over 40% versus 37.2 in the same quarter last year. So let's get this right, okay? Let's get this right for a moment. By the way, operating expenses actually down for the company on a year-over-year basis, which is very incredible, right? So let's get this right. The revenue is going up substantially, right? Their amount of customers going up substantially. The earnings per share going up substantially. The gross profit going up substantially. And their margins going up substantially. I like that. And honestly, you could look at Shopify almost every single year, and that's been a lot of what they've been doing, right? Look at the free cash flow. Oh my gosh. Now keep in mind, a lot of people like to value a stock like Shopify more off free cash flow than they do actually off of net income. So just a little food for thought in regards to that. Okay. Free cash flow, $232 million in this latest quarter. That's up from $86 million in the same quarter last year. Free cash flow margin of 12%. That's versus 6%. So they doubled that up on a year-over-year basis. Incredible, right? And once again, this is a metric that a lot of people like to. I always like to look at net income, think about where net income's going over the coming years. But I can't dispute there's a lot of investors in the market that like to look at free cash flow. That's their own decision, right? I do things my way. They do their things their way, right? Now, here's a 4-year chart of Shopify. The stock's down 42% in the past 4 years, right? And this is nothing but a blessing for people like myself that are active buyers of Shopify stock right now, because we're getting the stock at heavy discounts versus, what people were certainly paying years ago when the company was doing, let's be honest, the company was not in as good of a spot back then, right? The growth rates might have been higher, but the bottom line is their revenues were substantially lower back then. Their net income was substantially lower back then, right? The whole business model, I think, was a lot more in question back then about how big they could become, and I think a lot more is proven out now. So I look at Shopify now, and I see a company with unbelievable upside, but I also see a company with a lot less risk than if I looked at this company 4 years ago, to be quite frank, right? Now, additionally, this stock used to be up all the way up to $170. Do I think it's going back to $170? Yes. And it's going to go way higher than $170. Like this will be taken out over the coming years. And then from there, it's going to be a whole lot more fun. I see Shopify as the type of company that could be a $1 trillion company long term. When you look at the $1 trillion club, those are special companies that can put up special growth despite inflation, recessions. They can put up incredible numbers no matter what. They got tons of growth levers all over the company. And look at Shopify. It's exactly that. They got growth levers all over this company. They can put up great numbers in any environment, recessions, inflation, shutdowns, no shutdowns. It doesn't matter. Shopify's putting up their numbers, growing, and there's really no signs of them taking their foot off the pedal in regards to the situation. I called Shopify stock a stock that you want to buy and you don't want to stop buying that. It's exactly how I view this company for the next several years. It's not like Shopify is one of those stocks where it's like, oh, if it goes up 5%, I got to stop buying it. No. Maybe some value stock out there that has very limited upside. Maybe that's the situation. Shopify has so much upside over this next decade that I can buy this stock and buy this stock. It doesn't matter. The stock could double over the next 3 years, and it would still be a buy. It doesn't matter, okay? It's that sort of company. It's very similar to this company that I'm a shareholder of, okay? And this other company reminds me a lot of Shopify, different business model, but in terms of the thought process about being able to buy a stock and just continue to buy it for years and years to come in the future and build your position bigger and your ownership stake bigger and bigger in that company, this is that company. Check it out. It's called Amazon, okay? Amazon's a perfect example of a company that if you look back at the past 20 plus years, you could buy Amazon stock every year. Every year, every month, you could be a buyer of Amazon, increasing your ownership stake. I'm still very frustrated with myself that I waited all the way until 2022 to start buying Amazon stock. I should have been buying this stock. I mean, I've been in the market since 08, 09. I should have started buying the stock when I first got started in the market, and 2 years into the market, and 4 years into the market, and 6 years. This should have been a stock I was always buying, right? But I didn't really understand how to value these growth companies. I didn't really understand the long-term opportunities and things like that. It took me a long time to really get to that place in understanding you got to pay up for these sorts of companies. Special companies deserve special prices. You've got to pay up for them. You might hope, oh, maybe I can get it at a 20 forward PE. No, okay, not for special companies. For okay companies, maybe. But for special companies, it's just not happening, okay? Because there's always a lot of other smart investors out there that are willing to pay up for these sorts of opportunities. So all dips should be celebrated in Shopify stock over the coming years, just as all dips should have been bought and celebrated in Amazon stock over the past few years, okay? Hey, I want to thank you for watching this video here today on the Clips channel. I want to introduce you to 1000xstocks.com. This is the most valuable service you're going to find out there. If you're an investor in the market, this is a tool that's going to help you immensely get to the next level in the market. So when you're looking at 1000xstocks.com, you're able to understand all the different metrics laid out exactly how you need them as a long-term investor in the market. So let's say I wanted to look at a stock like Palantir. I can go ahead and type in Palantir right here, and it's going to say all Palantir's different metrics right here. Let's say I want to go ahead and look at a stock like Tesla. I can go ahead and type in Tesla right here, search, it's going to give me all Tesla's metrics right there. Let's say I want to look at a stock like PayPal. Go ahead, search it up, and then it's going to give me all PayPal's numbers laid out right there. Compare feature is one of the most valuable features of any service literally in the world. And the reason being is you're able to compare 3 different stocks all next to each other in a matter of seconds. It's absolutely, there's no service you're going to be able to find something like this. So let's say I wanted to find out, what do I think is a better buy? Do I think it's Meta? Do I think it's Google? Or do I think it's, let's say, a stock like Microsoft, for instance, right? So I can go ahead, type all those in there, and then hit compare, and boom, in a matter of, what was that, a second or two, it gave me all the metrics out. So now I can say, okay, Meta's forward P is trading at this, Google's forward P is trading at this, Microsoft's trading at this, and I can go ahead and understand this on a very high level. Additionally, we have earnings calls on here as well. So if I need to listen to any companies I own or am researching their conference calls, I can do it right here through the service. So let's say Tesla, if I want to pull up Tesla's latest conference call, boom, I can play it. I can adjust the speed as well. So if I want to listen to it at 2x speed, I can listen to it at 2x speed, 1.5x. I also have the transcripts of the conference calls as well right here. We're also working on a lot of different new features behind the scenes. So if you would like to apply for access of 1000xstocks.com, go to 1000xstocks.com and you'll be able to fill out an application and go from there. Costco.
Retail earnings season is just wrapping up, giving us some more insight into
By the way, let me show you why Costco is such a dramatic stock, okay? It's a drama show. Here's the deal with Costco, okay? Costco, look at the forward P on Costco. 49, almost 50? This is Costco we're talking about. This is, I mean, that's, look at even NVIDIA. Look at this, okay? Check this out. Look at the forward P on Costco is higher than NVIDIA. That seems like it's not even possible because we know the growth rates at NVIDIA are just ridiculous. And like Costco is like a well-established retailer, right? That's where Costco gets very interesting because you're looking and you're like, what the heck? Like why would Costco be trading at this sort of forward PE based upon like that's just pretty wild, right? So.
Consumer among the retailers we're heard from are warehouse giant Costco, hitting an all-time high again today after beating on all key metrics last week. And my next guest says there's still more room to run. She raised her price target $50 to $8.90. For more on that stock and how to position more broadly in retail, Laura Champagne is here. She's senior consumer analyst at Loop Capital Markets. Laura, it's great to have you back. Welcome.
Thanks, Kelly. Thanks for having me.
I went back and looked up you know what I'm going to talk about, the Home Depot call, which I thought it was one of the great calls. You made that call on October 8th of 2021. The stock, okay, it maybe had a blow off top of 10% higher, but when you downgraded it back then, you absolutely nailed the inflection point, and now here we are at 328. So before asking you about that, I guess I would ask you more broadly, what kind of inflection point, if any, do you think we're at with the consumer right now?
You know, the consumer is holding up okay. It's a slow growth economy from the consumer perspective. And as you point out, I cover the Home Depots and the Costcos of the world, but also Burlington, Ross. The more discretionary category is, the more it's under pressure. But best-in-class retailers always do well. It's part of our call on Costco.
Okay, so Costco, why 10% upside? Why not more at this point? Just the valuation? I mean, it's 50. It's probably one of the most expensive real deal stocks in the market.
It's a good point, and I would expect we've been stepping up our price target on Costco for almost 20 years. So I think that this 890 is on the way to a 920, but they do have to earn their way up. We think that this is a consistently great performer in a variety of macro environments, in part because most of their income and cash flows comes from their membership fees. So as long as people see value in the membership, Costco stock works.
Yeah, which
point.
is kind of to the point.
That's a good point.
Why not raise the price target more? But here's the thing that's tough about Costco, is all investors know. It's worked for 20 years. It's been expensive, you correct me if I'm wrong, for 20 years. It's been a crowded long for, 20 years.
That's true.
And yet, is there any reason to pile out of it?
Couple of reasons to pile in. So new CEO Ron Vaccaris has been there a long time, but a little more intriguing to those of us who've covered this one for decades. Gary Millerchip, who just joined after a 16-year career at Kroger, brings that rare sort of outsider insight, and his specialty is more on using consumer data. No company has consumer data that's as valuable or as complete as Costco, because you give them their membership card every time you make a purchase. So his ability to do some sort of new economy things like monetize their retail media network could add to this. That new CEO, Ron Vaccaris, although he's been there a long time, has been a little more public at saying that their margins could move higher. So I look at next year, I'm $2.50 ahead of consensus for EPS. That's assuming they add $1.5 billion on SG&A expenses. I think I'm probably conservative.
That's really
So there is one thing that could destroy Costco stock, and that would be Amazon. If Amazon comes out and says, listen, man, we're going to take bulk super serious over this next few years, we're willing to lose money on this, we need to build out our bulk category big time, that would cause a big downfall in Costco, right? I mean, at the end of the day, Costco, some people think it's fun, some people think it's a pain in the butt, right? To go in there and it's crowded and you got to hit your basket with a bunch of other people. It would be nice just to get all those things just delivered straight to your house, right? And we know Amazon's got the network to be able to pull something like that off. But does Amazon want to go that route? Maybe they don't, right? Maybe they're just not really focused on that. And so therefore, there's no real competitive threat for Costco. You have Sam's Club, which is, Walmart's division, and that is what it is. They've been competing against each other for a long, long time. But outside of Amazon's really the only major threat, in my personal opinion, to Costco. If they went after them, then I think we got an interesting fight. But outside of that, there's really no one else that's really got the scale to really compete with Costco, or the seriousness to really compete with them overall. Okay, so but at the same time, I wouldn't say that stock's a buy at a 54p. Come on, man, no. Like, Costco's way too much of a older established company to be paying those sorts of valuations for it at this stage in the game. So that's my opinion on that. Okay, appreciate y'all joining me as always. Much love. Thanks for being here. Pin comment down there, folks, will be for the free workshop that I recorded for you guys a few weeks ago. 7 steps to 7 figures plus in stocks. About a 32-minute video. You get a lot of value out of that one. Much love and have a great day.